How do you know if a market is about to switch from the consolidation to the full trend? This might be obvious in Heising when you look at the previous chart, but in the real time, this major challenge for all traders. You know the situations have got set up that you like on the market that you follow, but the market looks like it's in the range. What do? You take the signal or wait. Luckily for us, there's the interesting tool that can help to detect when such a switch from consolidation to trend might be near. In today's video, we will discuss about the item squeeze indicators, and I will share you how to use it and how to trade with it to find the best setup. Squeeze is volatility and momentum indicators, which is bad on that tendency for price to break out strongly after consolidating in a small price actions range. Trading price actions is a pretty straightforward idea of understanding support and resistance levels. However, understanding momentum at the directions of price at these levels is probably one of the most difficult concepts of many traders. Being able to spot momentum increasing or decreasing at these levels makes the difference between success and failure when entering trades. That's why squeeze makes spotting momentum change and incoming volatility much easier. The TTM squeeze indicators visualize the relationships between the Bollinger Bands and the Kelvin channels, which helps to identify when the asset is consolidating, meaning squeezing, and signals when the prices are poised to break out. If the Bollinger Bands are completely enclosed within the Keltnet channels, that indicates a period of very low volatility. This state is known as the squeeze when the Bollinger Bands expands and move back outside of the counter channels. Volatility increases and prices are likely to break out of the traditional range in one direction or the other. The TTM squeeze is comprised of two main components. First is the momentum oscillator. This is the vertical histogram which indicates the direction of the momentum. The green vertical lines is positive momentum and the red vertical lines is negative momentum in relationship to their positions or below the horizontal zero line. The zero lines is a second component. This histogram lines is where the squeeze is visualized by the series of the green and red dots. Green dots are conditions of the squeeze and the red dots are the price of is squeezing. The squeeze signals, meaning the red dots appears when the Bollinger Bands are squeezed into the Keltner channels. Now let's actually add the Bollinger Bands and the Keltner channels to the chart. As seen, this squeeze conditions represents the consolidations of price with Bollinger Bands within the Keltner channels, which corresponds to the series of the red dots appearing along with the zero lines on the TTM. Increase in momentum is represented by the higher bars on the momentum histogram on the TTM and the expanding of the Bollinger Bands with the release of the squeeze, seeing the red dots turning green. The TTM squeeze indicator helps to take a lot of the guesswork out of the momentum equations with the simplified representations of what's happening when the Bollinger Bands and Cantor channels enter consolidation please, and you have a much simpler and cheaper charts. So how to read and how to trade with the TTM Squeeze. I said before, TTM Squeeze has both volatility and momentum components. The squeeze dots signals volatility conditions, while the momentum histogram indicates the directions long or short which to trade. In the TTM Squeeze we have the horizontal lines that change color between green and red. This represents the situations of the market in the current momentum. If we happen to find that the DTM Squeeze horizontal line is red, it means that the market is in the consolidation period and it's not ready to move just yet. However, if the final spots the green dot after the series of the red dots in the middle line, this means that the market is finally ready to move, and it will most likely do it in a somewhat aggressive way, because volatility increases and the Bollinger Bands expand until they are outside of the Keltner channel. The author of the indicator recommends taking a trade on the first green dot after or more red dots, but the questions that remains is in which directions will the market move. Now the momentum histogram helps to determine the directions in which to trade. If the momentum is above the zero lines and rising long trades are recommended. If the histogram is below the zero line and falling, however, short trades are recommended. The histogram bars are coded bars above the zero lines are green and below the zero lines are red. In additional, a bar that is lower than the previous bar will be a darker color, and the bar that are higher than the previous bar will be a lighter color. Then the histogram change directions and starts moving back towards the zero line. That's a signal to sell. The momentum histogram can also be used to determine specific exit points, like selling when you had two bars in the new color. For example, if the squeeze fires and the bars are above the zero lines and increasing, you could sell when you see two bars in a row above a zero line, and decrease. Just to be clear, when you analyze a market, your focus should be on the zero line. The red dots by themselves are not signals for entering a trade, but should be used in combining with the vertical momentum bars, as the momentum bars near the zero lines is the signals or consolidations that we should be looking for, which indicates that momentum is shifted into the positive or negative theory. Once these conditions are met, in the entry can be considered. There are many options about to enter the trade at this point. Once a momentum shift has been confirmed, some traders do so on the first bar, others after one or two bars have been confirmed. This is something that you will have to determine on your own. In the 50 minutes chart we have marked several squeeze signals. The first squeeze is quite clear. It is marked on the left side of the chart. As you can see, the squeeze indicator is telling us that there is a momentum ready to go in price, and it will most likely be bearish, as the red bars appeared exactly with the squeeze. However, the second squeeze directions is not so clear. The TTM Squeeze histogram tells us that it will most likely be bearish one, but the truth is that and the begin being a bull squeeze. In any case, this is the perfect example of why we should be using stop loss orders to avoid example losses. The third squeeze, even when it takes some time to finally move, does it to the upside. There's another example on the hour of time frames, the TTM Squeeze have a perfect one entry, several red dots appears, indications the market has built enough consolidations entry and is ready for the squeeze, and the red dots have green histogram rising upwards, indicating that there is a bullish momentum occurring. Beneficiation is this and energy. The previous trend was also bullish. An important aspect of consider when analysis is set up. My preference is to look for squeeze trades in the directions of the main trend. In this case, as expects, the market responds with the aggressive spikes upwards. Don't expect to market to move immediately after that cover change. In some cases the market will take some time to start and you move up or down. There's an example to illustrate this 21-hour time frame. We can observe the red dots shift to green dots, and we know there is a bearish momentum behind the potential squeeze and ideally entry for the short trade. The setup was obviously for the short trade, but the price didn't move right away in the excellent directions. We had to wait a bit longer before move came in the opposite directions, so make sure your risk money management is on point. Here's another example of valid trades. Another way to determine squeeze indicator can be trade is by using the divergence. Divergence is when Instagram momentum bars being sloped towards or any from the zero lines, and the price moves to the opposite directions. On the upper part of the charts, bearish divergence. This is when price is making higher highs, but the swallowers of the histograms on the TTM are making lower highs on the positive sides of the zero line. Voltage divergence is when the price is making lower lows, but the histogram is sloping towards the zero lines from the negative sides of the lines. Like any other technical indicators, the TTM is no magic bullet, and it would be best used with other indicators as confirmations of price directions. You could add a moving average or the Ishimoku cloud, for example, or even switch to a Heikai chart to visualize the main trend better. Also, the TTM squeeze can be used in many time frames. My preference is to look at the same market in multiple time frames for confirmations. For example, if the squeeze is firing on the both daily and hourly chart at the same time, that's a strong signal that squeeze that is only firing in one time frame. So lower time frames are typically used entry and exit to support the higher time frames when daily trading or slight trading. Just remember these steps. Find areas of consolidations with the red dots. Look for momentum to break out in the directions of the main trend and confirm the momentum with the higher time frame. If you learned something new and found value, leave us a like to show your support. Don't forget to subscribe and hit the bell icon to get notified when we release a new video. Until next time.